Hello everyone and welcome to another real estate video. This is Javier Vidana, the real estate YouTube guy here in Phoenix, Arizona, helping you accomplish your home goals. I'm sorry, I still look like a werewolf. Once again, Arizona is a really terrible COVID hotspot right now. Honestly, there's a lot of dumb people in the state, and a lot of them are in the real estate industry, who decided to just throw caution to the wind. And of course, now you're gonna have to deal with werewolf Javier again, because I don't trust that people are taking care of themselves, and I don't want to go get a haircut because of that. So in today's video, we're going to discuss credit, and more importantly, how to either improve your credit score or clean up your credit score. Now, it doesn't matter what part of your credit journey you're in. If you're in a bad spot where you really need to get your credit in line, or maybe you're just in the spot where your credit's okay or good, but you want to make it even better for home buying, or if your credit's perfect already, I don't know why you're watching, maybe you're just a fan. And before we begin, I do want to thank our sponsor for today's video, Dr. Squatch. I've actually been a user of Dr. Squatch for a long time, and when they reached out to me for the opportunity, I took it in an instant. So I personally love their soaps. They have soaps, they have shampoos, colognes, all kinds of great stuff that smell just great, and they're natural, no preservatives in there. It's just an amazing product. If you're interested or you want to buy it for a friend or family member, use code Javier at the checkout to get 10% off the entire order. And of course, you're helping the channel by doing that. So thank you guys very much. Now, anyways, first and foremost, I want to change the way you think about credit. A lot of times when people think they're going to improve their credit, that means start paying everything off and closing all kinds of accounts. Do not do that. What you want to do is you want to trick the system to start liking you a little better. This system is to show other credit card or other creditors out there that you can trust this person to give credit to, right? It's like you borrow money from your aunt. If you don't pay her back on time, that aunt's gonna talk shit about you to other aunts. And now you can't go to the other aunt and be like, yo, can I borrow some money? They're gonna be like, no, your other aunt told me you didn't pay up, so we're not gonna do that. That's exactly how credit works. Let's talk about the worst things you could do first for your credit. Worst thing you can absolutely do for your credit is 30 days, 60 day, and 90 days late. These are gonna be really tough to repair. This isn't just like your run of the mill, oh, it's 30-day late. Oh, let me make a payment. There, we're fair, we're square now. No, I made this example in my other credit video, and I make this example all the time in my live, but it's just so true because I relate to it so much too. If you're in a relationship, and let's say you make a derogatory comment towards your spouse, or you forget an anniversary, or whatever they get mad at you about, you messed up. In this case, you did a 30-day late, hopefully not a 60 or 90-day late. That's even worse. Now, if you just want to pay off the 30-day late and think it's going to be done, well, it's just like the spouse situation. If you decide to just say, oh, I'm sorry, here's some chocolates or here's some flowers, do you think that's going to fix the problem? No, your spouse is still going to be super pissed at you, and it's not going to go away right away. So what makes it go away? Well, it's going to take continual, consistent, good deeds and just positivity to make things right again. And eventually, she or he still might remind you about this mistake you made in your past. Likewise, a 30-day late or 60-day late might still pop up in your credit for at least 7 years. But you, with good effort, it'll eventually overshadow everything, and your credit will still go up. Now, you want to avoid 30 and 60-day, 90-day lates like the plague, because they will affect you for at least the next year. So do what you got to do to not, you can make your payment late a day or two, whatever, you pay a late fee, but 30-day lates are going to be terrible for your credit. So try to avoid them, please, please, please. If you're in a position where your credit's not in good shape now, and we're talking like multiple collections that aren't even like you're not getting made payments towards. Maybe this is being added with maybe a lot of high balance credit cards. High balance being above, like really high balance, like 70, 80% above of your total credit limit, meaning if your credit limit's $1,000, you're like at $800, $900 balance, you're probably gonna be closer to the 500s, and I'll be surprised maybe low 600. First things first, if you're gonna buy a house, you wanna make sure these collections are actually being worked. You don't wanna have just a collection there that's not being paid or anything. Now, people buy houses with collections all the time, so there's nothing wrong with having collections. The problem comes when you're not having active payments being made to them or a payment arrangement. So if you call your collections up one thing I would recommend you do is just start negotiating them down. Now, you're obviously, if you have the money to pay them out and pay them off, then do that, right? But if you call them up and be like, listen, I want to go on payment plan, but I'm not going to pay the full amount. Let's kind of negotiate it. Because if it's gone to collections, basically collection companies are people that make a profit off, like they'll buy these like if you owe $5,000 to a hospital or $2,000 at Best Buy and you haven't paid, they'll buy that for pennies on the dollar. So that way the Best Buy or the hospital gets some of their money back, and that company now is going to be trying to get as much money as possible. Now, if they collect the whole amount from you, then in that case, they're making some profit, right? So there's some room for negotiation here. So I would advise you call any collection companies you might have and try to either get them to remove you all entirely or try to arrange some kind of payment arrangement so you can start working towards getting rid of it. If they're older, like 5+ years, I'm going to say talk to a lender to see if they're even worth fighting it. But if they're pretty recent, guys, you want to start making some payments. Now, if they're not budging, they're not trying to give you a discount or they're not trying to give you a low affordable payment. A lot of times people, if they get asked to move to another representative or something, maybe that person's not being very compassionate or very aggressive, that might work as well. I have never been in this situation myself, so I can't give you personal advice, but I have had clients who didn't hire a credit consultation company and just with themselves call these people up, they fight them tooth and nail, they get it discounted, and then on top of that, they work out these payment arrangements to get them paid. Regarding the high balance credit cards, meaning for the people that are, in the lower part, or like 500, 400, 600s who are struggling, if they see you're over 50% balance, it's like you're trying to swim, right? You're swimming and you got some floaties on because you can't swim like me, and all of a sudden you feel this giant anchor, like a chain that's being tied to your leg, and this really heavy ball or anchor just holding you back. You're trying to swim forward, but this thing is holding you back. Once you have a revolving credit balance of 50% and higher, meaning a credit that's revolving every month over your credit limit, your credit's getting hurt. And honestly, I haven't seen credits improve with people who have revolving credit lines over 50%. Now, what the percentage is highly debatable. Some people say less than 25, some say less than 33. Listen, if you want honest God truth, what's worked for me is having them closer to 10 to 20%. So anytime, there's times in my life where I've been struggling credit wise, I might have a few credit card balances. What works for me and what starts helping them is not paying them off completely, but aggressively getting them down to under 50% as my initial goal, make it my secondary goal to get them under a quarter, so under 25%, and ultimately having my goal be at 10%. Now, why is my goal at 10%? Because in my opinion, your credit does not grow as a rapid rate if you're having your credit cards paid off. You don't want to absolutely completely turn off your credit cards, or get rid of them, because what happens is part of your credit factor is how long you've had credit for. So if you had a credit card for 7 years and you pay it off to zero balance and you get rid of it, you take it out of your account, well, that credit life has now gotten whatever, it goes to the next credit card you've had for longer, and now your credit's going to dip severely. So you don't want to just turn things off. If you're in credit building mode, now I say credit building mode because I know I get a lot of Dave Ramsey people out here that say you should be 100% down or you should not have any credit at all. Listen, that's fine. But for those who are trying to buy houses and build our credit, we got to have some credit, okay? So to build great credit, you want to have it at a low balance. 10, 5, 20, maybe 25%, something low and manageable. What you want to do is not pay it off entirely. For people that pay it off to zero balance and then they reuse it again and they pay it off before the next cycle hits, your credit might not be boosting as highly. What really makes credit start boosting, that the bureaus start drooling over, is if you have a low balance that's revolving. They're charging interest on that 10% that you owe on your credit card. Let's say you have a $1,000 credit card and you have $100 on it. They do charge interest on it, so now you might pay $20 or $110, which sucks, and the Dave Ramsey people will not like that. But what you're gonna see is that your credit's gonna start going higher. You wanna make your minimum payment, whatever, $40, $50 or whatever's gonna get it down. down. You're not really aggressively taking it down in balance, but what you're going to start noticing is your credit's going to start exploding. When you have active balances on your credit cards and you're keeping them at a low balance and you're making minimum payments so they actually make some money off you with the interest, your credit bureaus love doing that, and they love that stuff. Once you already have your house and you don't have to work on your credit, have them at $0 or not use them at all. That's fine. Be zero debt. That's great. But when you're trying to build credit, this is what's going to start helping you. So as a summary for those who are struggling with credit, start working on those collection balances. You want to start negotiating with them, start figuring out what you need to do. And of course, for your high revolving credit, try to make it a goal to get them under 25%. Now, which ones to focus on first? I always get this question. You know, there's different methods that you can look into budgeting. If you guys know of any great budgeting channels, I would love for you to put them down. My wife also talks about the snowball method and all kinds of other things. So I think my wife and I made a video about it. You can watch it here. If you guys want to hear more about that, you can. But you know, there's a lot of different methods to do it. So whatever method you decide, I would advise you to start researching it. Some people go for the lower interest cards, or some people go for the higher interest first. Some people go for the higher balances, lower balances. Whatever route you take, just start. That's the important part. Don't wait, just start. Now, for those who are in the mid tier, like the 600 and up, first and foremost, FHA only needs you to be at 600 and up, and they don't give you any advantage to go up. So I've had people that are here at 630 credit score, and they're like, Javier, I need to get my credit score to 660. No, FHA is not going to treat you differently if you're at 660 or 630. So if you're going FHA, you're good, you made it. But if you want to improve your credit, because maybe you have 6 months to a year, then really use that credit card method I told you about earlier. Don't have your balances at zero. You know, it's very intelligent budget wise to be doing that because you don't get charged interest. But when you're trying to grow your credit, they have to make some money off you. They have to be charging the interest rate. Now, if you don't want it to be a lot, keep it at like all my credit cards normally are at 10% balance, because that's just what's helping me grow my credit into this monster number. I have a few credit cards that are at 10% balance, and if I see them start getting too low because they're lower credit interest rates, then I'll go and spend it on a game or something. I don't know. So I kind of manage them to be around 10%, and that's what's really exploded my credit. Honestly, I would love to say I've had it my whole life, but really it's been the last year or two that I've really taken advantage of this. Now, if you're a year, 2 years, maybe 6 months out from buying a house, and maybe you only have like one credit card or one car, and you don't have a credit card, what I usually see for people to go into the 700s and beyond that, it becomes more than just paying off your things on time, right? You want to start having a diverse line of credit. That's how you start going into the deep 700s. So if you're at a point, like I was saying, you have a car payment, maybe you have one card, or you have one card and that's it, you have to start diversifying it. Now, I only advise this if you are definitely a while from buying, because you don't want to just like 2 months before you buy a house, pull out a bunch of credit cards. But personally, what I've done to help me build my credit is I start getting multiple credit cards, right? As soon as I could, or as soon as I was in the 700s, you are going to see a slight dip when you do it, but as you start diversifying your lines of credit, you're going to start seeing definitely the potential of the boost going up a lot higher and higher. So instead of having one credit card you use for groceries, you keep it at 10%, maybe pull out another one that you keep that at 10%, all right? Or maybe you can get a small car loan that you keep there as well. Or maybe what really helps a lot of people is a department store credit card, right? So once you start getting like 3 to 5 different lines of credit that you're handling intelligently, that's what you're gonna start noticing. Even though you're gonna do a small bump at first low, you're gonna start being in the 700s, right? I guarantee you, anyone in the comments below, if you're in the 700s, 750s, I bet you guys have more than 3 lines of credit. If you really want to go into the deep 700s, you have to start using multiple lines of credit. Now, a lot of people in the budget world might not like this. They don't want you to get into debt, and that's fine. I agree with them. But if you really truly want to strengthen your credit, you want to have multiple lines of like roots in a tree, but you want to make those roots strong and actually are working for you. You don't want to have like 3 roots that are great and have one root that's rotten, like a high balance credit card or something like that. So you want to have all your credit lines be intelligent balance, and you're doing it with purpose. You're not getting another credit card because you really need to get the newest technology or whatever. You're doing it because you're like, okay, I have this one credit card I'm handling well. I think let's handle another one. Let's get another one. Let's keep that at 10% and just make that minimum payments and keep it going, keep it going. But that's all the time we have for today, guys. Thank you so much. I want to make this video a little more interactive. So if you haven't already comment on, I want you to go below. If you've improved your credit or either with help or without help, please share some tips that you've done. What are some things that really tremendously helped you get your credit higher? Am I full of crap or am I not full of crap? I want people that are watching this video that need help with credit, not only get advice from me, but get advice from the Home Goals homies that we have here. So I want to hear from you guys. What's helped your credit? What's a myth that maybe didn't help your credit as much? Please share your info below. Everyone else, I really appreciate your time. Thank you so much. If you are in the Phoenix, Arizona area and you need a realtor, you can definitely hire me. If you're not comfortable meeting with me yet, you can download my app. All the links are below for my contact information and everything else. Everyone else, if you want to follow me or just be part of my life or just send me a casual question, you can follow me on Twitter, Instagram. My Discord server is below, and of course I have a Twitch channel. If you guys want to catch me live here or on YouTube or on Twitch, let me know for sure. Thank you guys so much for your time. I appreciate it. Hope you have a great day.